Welcome to the channel. Today's focus is Pace Digitek Limited's IPO, an offering attracting serious attention in the telecom infrastructure and energy storage space. Headquartered in Bengaluru, Pace Digitek acts as a full-spectrum solutions provider, handling everything from manufacturing and site development to turnkey execution for leading telecom and energy clients. The company's presence spans project delivery in telecom towers, fiber optic solutions, and cutting-edge battery storage for large-scale energy needs. Let's look at what this IPO is all about. The subscription window is open from 26th to 30th September 2025, with listings set for 6th October across NSE and BSE. The price band has been fixed at 208 to 219 per share, and retail applications start at lots of 68 shares. So for retail investors, the minimum investment is just under 15,000. The entire core issue is a fresh one. Every rupee raised will go into company growth, specifically for CapEx in their energy storage subsidiary in Maharashtra and other business expansion goals. Now, on to the financials. Pace Digitek is showing impressive numbers. Projected revenue for fiscal 2025 stands at 2,462 crore. EBITDA is 505 crore, and profit after tax rises to 279 crore. Return on equity is over 23%, and EBITDA margin sits at a robust 20.5%. What stands out is net worth doubling within 1 year, and borrowings dropping sharply to just 161 crore. Clear indicators of financial discipline and operational scaling up. These are strong numbers for a company operating at the intersection of telecom and energy solutions. The IPO's gray market premium is also noteworthy. As of 28 September, the GMP is trending at 33 per share, indicating a potential listing gain of 15% or more, always an early sign of strong demand, though not a guarantee of actual gains. Business-wise, Pace Digitek's strengths are clear. The company has a strong order book for both telecom projects and new energy work, which provides solid revenue visibility going forward. They have 2 advanced manufacturing facilities in Bengaluru, sophisticated product lines, and a skilled leadership team driving growth. Their operations span electronics, lithium-ion battery systems, rural electrification, solarization for telecom, and a range of smart ICT solutions. There are, of course, key risks. More than 90% of revenue is from the top 10 clients, meaning any change with a major customer could hurt. The company also operates in sectors sensitive to policy and regulatory changes. Plus, with growth comes constant need for capital expenditure, and so managing cash flows will remain a priority in the future. To sum up, Pace Digitek IPO is backed by strong financial performance, a cleaner balance sheet, and positive market sentiment. The company is playing in sectors central to India's growth over the next decade: telecom infra and energy storage. On the flip side, investors should pay special attention to client concentration and regulatory risk before applying. If you found this analysis useful, don't forget to like, subscribe, and share for more in-depth IPO and market updates. This video is meant for education, not investment advice. Always research and assess your own risk profile before investing.